All right. Hello, everybody. Welcome back to another Sunday's Future show. We are here today, Sunday, September 29th, 7:45 p.m. We have 1 day left of September, and then we will officially be done for this month, which is why on this episode, we are going to recap what the heck happened in the month of September, because we went through a lot. And although it's been a bullish month to end it out, and we'll see what happens tomorrow, um, it has been a crazy month that was obviously very rocky in the beginning of the month with the worst week of 2024. But we'll go into that and go deeper and further. On top of that, we got a ton of macro stuff to discuss. We have a big week coming up in terms of the first month of October, or the first trading week of October. And I believe on Friday, if I'm not wrong, we get non-farm payrolls. I believe it's the first Friday of every month, so that would be October 4th, which means we are going to see how many jobs we added in the month of September. Last time, September 6th, that was a very important number. We added 142,000 versus 160,000. The market didn't like that. That's why we tanked, the worst we've seen in a long time, but then we recovered. So October 4th is going to be really important. I have some updated analysis on that. Also, we have some charts to look at in regards to what happens after September is positive, because for the past 4 years, September has been negative. And so we're going to see how the market closes out tomorrow. But we have some charts available to figure out how we can project the next 18 to 24 months after that happens. And also what happens during an election year in October. We're going to go through that, go deeper, and try to figure out kind of what happens as well. So lots to discuss and a lot to get into. I hope everyone had a good weekend. Thank you all for being here. Top Dasher, what's up? Jimbo, Patrick, Midwest, Daniel, Ali, Gene, what's up? What's up? Got me on the big screen tonight. I love it. Katie, hello. Quarantine Quartet, thank you for making school lunches with me. Perfect. I love that you're making school lunches and you got me in the background. That is awesome. Tessa Best, hello. Bay Ray streaming during Sunday football is criminal. You know, I've never been a big Sunday football fan. I like the Super Bowl, but I've never actually sat down and watched Sunday football. I know you got to really care about football to watch it. So yeah, thank you for spending your time with me if you're not watching Sunday football, because we're getting updated in the world of the markets. Jonathan, Brent, Lisa, Melanie Struck, thank you everybody for being here today. TM, what's up? Oh, China. I forgot to mention, we have a lot of new updates on China, and including what they did this morning. The stimulus is not stopping, so we have to talk about China and what's going on as well. Jared, thank you. Antonione, I'm probably saying your name wrong. Your name is Ant and then Onion, but I know your name is not Ant Onion. If it is, that would be a cool name. I feel like your name is different than Antonione. Maybe that's what is that Italian? I feel like that's an Italian name. Newer fan here. You were doing a great job. Thank you for being here today. Appreciate everyone for joining. And if you got two screens up, one with football, one with me, football, no audio, me with audio, then that's great as well. You can still watch some football and get some updates in the world of the stock market. Albanian. Interesting. I like it. Tony is easier. Yeah, Albanian. That's a cool name. It's so interesting to get people's names from all across the world as they join. It's so super awesome. That's dope. I thought it was Italian for some reason. I guess the Antonio part felt like it was Italian, but Albanian also makes sense. Marky, what's up? Daniel, what's up? All right, so let's get started. We got a lot to talk about, a lot to get into. First of all, over the weekend, let me know in the chat what you guys did over the weekend. I went not on a date, but you guys are basically you're not gonna believe me regardless. So yeah, it was a date, if you want to call it that, with one of my boys who works at Palantir. Now, the hilarious thing about this is I told you guys that when I went to go see him, and I would tell him, hey, the chat thinks it's a date, but it's not a date, that he would say, what are you talking about? It is a date, because he also acts gay, even though he's not gay. Well, this is what he tweeted. I found out an hour after he tweeted this. On a date, kind of nervous. I knew that something like this would happen, because that's just who he is. That's my boy Mateo. So what was hilarious about this picture, dude, we were at some Korean. I haven't had Korean barbecue in 5 years. I had it over the weekend in New York. It was incredible Korean barbecue. The bricks in the background, dude. The freaking bricks in the background. You think I escaped the bricks? Nope. At AIPCon, there were bricks in the background. And now, as I'm having dinner with a friend, there are the bricks in the background. I don't know how it happened, but it happened. And again, I didn't know he posted this picture until an hour after. And I was like, wow, somehow the bricks find me, dude. And I don't find the bricks find me. So I don't think we can ever let go of bricks as a background. Like it's just a staple of the brand at this point. But one quick thing, and then we'll get into a lot of the macro stuff. I did ask him this broader question about, hey, there's this argument that AI is going to commoditize SaaS products, Workday, Salesforce, etc. Do you think Palantir is prone to that? And he said, look, there's obviously risks to anything, but the broader argument that he was going for is that Palantir is such a custom-based piece of software inside of enterprises, which is why they only have 557 customers, but they're still doing almost $3 billion in revenue. There is such a unique custom set of ways and integrations and deployments. That's why they're called forward deployed engineers, that the ontology in AIP is structured on top of a customer's data or a client's data, what CARP calls a partner's data. That would be very difficult for that to be replicated. So is that a risk? Yeah. But I mean, like that is a risk for every software company. Palantir, in his opinion, is just less prone to the risk because of the customization that's required to actually be able to implement something like Foundry, Apollo, AIP, etc., into an organization. In general, this argument that AI is going to replace SaaS, I think it's a risk for the entire industry. I just think if you're AT&T and you're Verizon and you've had a decade of using Salesforce and you have trillions of petabytes of data that is navigating and governing your customer relationship database, that's not going to go away overnight. And to replace that overnight with some off-brand white label AI product that can do it at 1/100th of the cost is not the issue. You know, it's not like these companies are mad that they're spending so much money on these software products. They just want efficiencies and productivity from them. So to decrease that cost to get a off-brand product and leave the vulnerabilities of all that customer data potentially to not be secured by a company like Palantir, Datadog, Snowflake, etc., even though Snowflake had a bad data breach a couple months ago. That is something I think most companies are not going to be willing to agree to immediately. Maybe over the next decade, AI gets that good, but I don't think that's going to happen anytime soon. So in general, that was his perspective. That was the one question I told you guys I would ask him is Palantir prone to that? And his argument is just that Palantir is so custom built within these enterprises, it's going to be very hard for that to be just flipped up overnight for a random off-brand AI version of the ontology. But we'll talk more about Palantir in a little bit. That was ultimately his perspective on that entire concept. All right, so it's ironic that Amit doesn't like Databricks. That's a good one. When Databricks goes public, folks, it is absolutely time to start selling some stocks, because once Databricks gets the liquidity to suck up probably $60 billion in an IPO, unless the AI thematic is just going absolutely to the moon and it's just not stopping, I think that's when, you know, we have some issues when it comes to liquidity. Now, granted, if Palantir can command a $85 billion valuation, I also think Databricks is going to be able to command at least a $50 billion valuation, especially because they're growing about 60% year over year. But we're going to have to see, when they go public and how that happens. In general, it's less about Databricks. It's more so when companies get ready to go public, that means there's so much excess liquidity, which we've seen barely any companies go public this year. We saw Reddit, which has been a success, and then Tempest AI, which is a healthcare AI startup, still have not fully dived deep into them, but they're up like, I think 30% for the year. They've so far been a success if you bought the IPO. 2025, with more rate cuts and more liquidity, we might see a lot of more IPOs coming up. Speaking of liquidity, let's get into what happened in September that is able to generate all the liquidity that is currently flowing around. In about 7 minutes, we'll look at Robinhood as it opens up, and we'll see how stocks are moving in the overnight trading session. But first, let's start off with a September recap. So what happened in September? A lot happened in September. So first week of September, we had a 5% down or 4.5% decline in the S&P 500, right? It was pretty tough. I think we got to the 537s of the S&P. And that was after that September 6th jobs data that we got, where we had 142,000, which was not bad, but the expectations were 160,000. Semis, banks, tech, everything got hit. I think NVIDIA hit 102 at the bottom. Was not a good first opening week for September. However, the next week was one of the best weeks of 2024. We got CPI coming in at 2.5%. We had NVIDIA going into this Goldman Sachs conference with Jensen Huang saying why AI is going to take over the world. The same thing he's been saying for months, but like he just said it again and people got excited. And then Oracle had earnings. They absolutely crushed. Oracle went up 30%. Larry Ellison became the 8th richest guy in the world. And basically Ellison gave this really nice speech at the Goldman conference as well, saying, hey, I can't get enough money to buy NVIDIA GPUs. It's going to cost $100 billion if you want to build a foundation model. He just put out a bunch of stats about why AI is so important, and the market ate it up. So the first week of September, disgusting, bad macro data, and we got a nice little decline. And that was after the August 5th kind of recovery going into the month of September. And then the second week of September was pretty incredible. Over the next 2 weeks after that, We had the Federal Reserve cut rates by 50 bips. This was a very, very big deal. Sometimes we forget that the Fed did that, but the Fed did that. Second, we had China. We'll talk more about China in a second, but they launched a massive stimulus plan. Now FXI, which is the large cap internet company ETF for China, it's outperforming the S&P 500 by 19%, which is crazy because the S&P has been like fighting all year for its 20% gains. China's up 38% year to date, and most of that came in within the last 3 days, which is just insane. The Saudis decided to keep drilling. Oil fell by 4%. This is great for every company on the planet because every company gets to lower their input costs when it comes to oil. And then the U.S. on Friday met GDP expectations of 3%. We beat on inflation with PCE, which is what the Fed really cares about. And then initial jobless claims came in lower than expected as well for 2 weeks in a row, which is very good. So over the month of September, the S&P is up 1.7% for the month, but it's up 5.5% from the lows. We've got 1 day left, which is tomorrow. Futures are relatively flat, a little green today, nothing too crazy in the futures, and I'll show those in a second, but nothing kind of too, it's kind of indifferent, essentially. There's no big things affecting it, but I think there's a couple of things that could affect it in the next 24 hours. So October is coming up, and it's probably going to be volatile. We'll read what Tom Lee had to say in his Sunday note about October as well. But so far, it does seem like September is going to be a decent month in terms of how it ends out as we get into that last day. Now, if we decline 2% on the S&P 500 last day on tomorrow, then we'll be flat for the month. I think that's unlikely to happen. And the reason I think that's unlikely to happen is primarily because of China, which we'll get into a bit deeper because I think that's very important. But if we end out, tomorrow, 570, even 560 on the S&P, 565, 568, we're going to have some decent momentum for the month of September, and then we'll deal with October. Now, here is the China comparison to the S&P 500. You got large cap ETF FXI up 38% year to date, S&P up 20%. So you've got an 18% outperformance by China against the US, even though the US has all the big tech companies in the world that have been producing incredible results. But China stimulated. And because China stimulated, that is why, they are starting to catch momentum and catch a bit of a bid in the broader equity markets. Trading was sluggish in September, regardless of the upticks. Yeah, I agree. I don't think the volumes in September were that massive compared to like the volumes in July. July volumes were absolutely insane. However, I do think there was a decent amount of people that woke up and realized that this might end up being a bullish year, not a bearish year, and that we might not have a recession. And so people are gearing up to probably put money into the markets. I think people are really waiting for a pre-election dip, and that's when they're going to like splurge. Like if we see S&P to, 540 again, I think people will get really excited, especially if we're not having a recession. But we're going to have to see if that ends up playing out. So let's talk about, can we get a bell on overnight market? No, we can't do a bell on overnight market trading. That would be funny though if we did a bell right at 8 p.m. Let's talk about China. We got overnight opening in 2 minutes, but I want to spend a couple minutes talking about China, and then I want to get through a couple charts and also some stuff that's not the best for the economy that's going to be taking place this week. If you guys haven't heard about what's going on in the ports and some strikes going on, we definitely need to talk about that because that is not a good thing. So here's something I saw today, which was just insane in regards to China. Powell speaks tomorrow as well. Yep, we'll be covering that. Here's what Bloomberg said this morning. So brokerages in China are now offering 24/7 services to meet the demand as new individual investors rush to open trading accounts after the Chinese stock market rallied 16% last week, per Bloomberg. To put this in perspective, China has not rallied 16% in a week since 2008. It has been so long since China had the momentum that it had last week. And a lot of people, there's been a lot of like false starts to China, false runs to China. It doesn't seem like that's the case right here. It seems like the CCP is hellbent on making sure that people actually start investing in their market. One piece of news along with China as well that we had this morning. So we had a bunch of different stimulative efforts last week, lowering reserve ratio requirements, lowering mortgage rates for second home buyers, and injecting liquidity into their banks, about 142 billion. This morning, they actually lowered mortgage rates for first and second home buyers by 50 bips. So last week on Wednesday, they lowered the down payment rate that you have to put on a mortgage. So I think it went from 25% to 15% for second home buyers, which means you have to put less money down on down payment, which is good because you have more capital you can do other things with. If the requirement wasn't 25% like it was a couple months ago, now they're cutting the mortgage rate itself for the first and second home buyers by around 50 bips. All commercial banks must in batches lower interest rates on all existing mortgages by October 31st to no less than 30 basis points below the PBOC's loan prime rate. Basically, the CCP is saying, hey, if you have loans out for people or you're issuing new loans, you have to do it at these rates. And we are determined to make sure that you do it at a lower rate, because if you do it at a lower rate, that is obviously going to be stimulative for the economy. The implications on this are massive. So 2 things on this, and then we'll look at the Robinhood overnight trading as it just opened. I think there's 2 ways this affects the U.S. Number 1, if more people start investing in things like Alibaba, JD, Neo, right? If you're in China, those are kind of the premier companies that are probably on your mind. It means that the global economy starts seeing Chinese stocks do well, because they have more capital. More capital means those companies can expand more, which helps the overall global GDP growth. China has been a laggard for the past 5 years around global GDP growth. This is very good for supply chains across the world, which all US companies have exposure to in some respect, most of them coming from China. Apple being the biggest company, all our iPhones and iPads and Macs are made in China, even though it's designed in California, and productivity increases. All of that helps the largest economy in the world, which is the US. The US is the largest and best economy on the planet. If you have another global leader like China that has been lagging for 5 years start to pick up some of the slack and start to really push productivity and supply chain efficiencies, which helps all the US companies, that's only going to help earnings for the United States stock market, which is obviously very good because more earnings growth means more capital gets injected into our market. Second, if I'm a Chinese investor who's now excited about investing again, I want to put my capital use because I believe that the government is finally on my side in terms of making it more pro-freedom, pro-capitalist in terms of the different equities I can invest in. I might start to take a look at NVIDIA, at Tesla, at the Qs, at the S&P, at Palantir. All the Chinese brokerages allow you to buy Chinese American stocks. Right? American stocks are not banned from Chinese brokerages. The question is, the sentiment has been god awful. I mean, just horrible over the past couple of years. So if you have people back into the investing mindset, they may begin to allocate more capital to stocks in general, which is good for the US. Why do I say people are back into the investing mindset? Because Bloomberg's reporting that Chinese brokerages are offering 24/7 services to meet the demand as individual investors are rushing to open up their trading accounts. You put all of that together, to me, that is liquidity increasing at a gigantic level. And that liquidity increasing obviously is very, very important for the broader global economy, definitely for our stock market. And it just makes it harder to believe that there is some massive cataclysmic recession coming up as long as unemployment stays okay, inflation keeps coming down, which inflation is doing good, given the global economy is starting to re-stimulate and central banks across the world, including in Europe, are cutting rates. We'll talk more about China, but let's look at some of the overnight trading on Robinhood. In general, I feel like China is stimulating at a massive level, and that's obviously very good for the broader stock market. All right, Bitcoin's at 65,500. We'll talk about Bitcoin in a bit. Palantir is up 37.03. Palantir's up 0.5%. Robinhood, which closed at 23.86, is now 23.69, so it's down about 1% in the pre-markets. Not the pre-markets, the overnight markets. IWM, small caps are up 0.33%. S&P is up about 15 bips. FXI, China, wow, up 4%. China is up 4%. Let's look at the Chinese stock. Hold on, I have a list for the Chinese stocks. Baba's up 2%. So there you go. You got Baba up 2%. You got JD up 5%. You got Pinduoduo up 1%. And then Neo can't be traded in the overnight markets. What else do we have? NVIDIA's down just a little bit. So China did make some news on Friday. They said, hey, companies in China shouldn't buy NVIDIA chips. I don't know if that's that big of a deal, but that's the reason that NVIDIA went down 2% on Friday. Otherwise, the market was very green on Friday. But that was one of the headlines that kind of was not the best for NVIDIA. Tesla's up 1.12% right now, 263. So you got Tesla up a little bit right here. We got Tesla up, PayPal 78.14, SoFi 796, Truist 42.52, SLG 69.50, DJT. Trump stock is down about 34 bips. Shopify 79, Amazon 188, Apple 227. Nothing too crazy. Microsoft 427, Netflix 706. Where is Coinbase? I would imagine that's down just a little bit because Bitcoin's down. Coinbase is down about 0.19%. Coinbase at 190 though, which is not bad. It hasn't been at 190 for a while. CleanSpark is not able to be traded in the overnight markets. BitX, which is the 2x leverage Bitcoin fund, that's down just a little bit, down about 1% overnight. Yeah, pretty much everything is flat to downish a little bit. Futures are overall green, nothing too crazy, but no big action on the overnight markets. These are futures right now. Futures are pretty green. I mean, by pretty green, I mean they're up 0.05%. It's not crazy, but they are indeed green. Japan futures are up as well, which is great. Japan's up 1.4% right now. And then Hang Seng index up 1.13, and then China up 1% as well, 1.57 on the CSI. So yeah, overall looking not horrible right now. We'll see what happens in the morning. But so far, okay. Baidu, can Baidu be traded overnight? Baidu, yes, that's up 2%. Look at Baidu. Baidu is basically China's version of Google. Baidu's market cap is 36 billion. And then KWeb, this is China Internet. Wow, 9% overnight. Again, dude, it is just incredible the amount of stimulus that is entering. These are the holdings of that index that are entering into the global economy, and obviously it's having a massive impact on China. Basically, Michael Burry was right in terms of going long China. So far, Michael Burry was absolutely right going long China, even if the opportunity cost was, I don't even know if there was an opportunity cost. I don't know how long he's been in China, but let's assume he was in China at the beginning of 2024. Okay, you're in China in the beginning of 2024. NVIDIA's going to the moon. Palantir's going to the moon. Even Tesla went from 130 to 270, right? Now Alibaba's outperforming a lot of stocks. Alibaba, dude, itself is up like 40% year to date, which is beating a lot of tech stocks. Yeah, 43% year to date. And FXI is beating the S&P. And it all happened in the like last couple months of the year, right? The last couple weeks, the move happened. And we only have a couple months left to go for the rest of the year. And if China's serious about this, I don't think if this is going anywhere anytime soon. So there you go. Rocket Lab. Can you trade Rocket Lab overnight? Let me see. Rocket Lab as well had a great... Yeah, you can't trade it overnight. They got to fix that, dude. We got to be able to trade Rocket Lab overnight. That's going to get a lot of volumes given how that stock's performing. Rocket Lab is up 80% year to date over the past month, 57%, 978. It ended on Friday. So Rocket Lab also has been having an incredible year. So in general, I think China, I'm not long China. I don't really care about being long China. I don't think it's bad to be long China because I think there's obviously an opportunity there. But I am more impressed with how the global market is reacting to China. And if China keeps injecting money to the banks, keeps lowering interest rates, keeps lowering mortgage rates, keeps lowering reserve ratio requirements, they are going to see an uptick of interest from investors. And that Bloomberg article about brokerages being open 24/7, that to me was the first sign of, oh, there's probably millions of Chinese investors that have been hoarding cash, just waiting to allocate it. They didn't want to put it into Chinese companies because they knew the Chinese government wasn't cooperating with them. And now they're like, all right, money printer's back on. Let's invest. And if they're investing, then I think the broader appetite for them to look at an NVIDIA or a Google and say, hey, well, if I'm buying a bunch of Alibaba, let me buy some Google as well. Like it brings so much liquidity. Maybe let me buy some Bitcoin. It's like there's so much momentum that happens as a result of it. And then just like on a basic logical level, if the companies start performing better because they can grow, they can expand, they can hire more people. They can pay those people. Those people can take a portion of their money and put it into the stock market. They can give bonuses to their executives that have been doing well because a lot of these bonuses are based on stock compensation. There's so many ways that this affects the broader market. I cannot understate how bullish it is. And, in a world in which we were debating 50 or 25, now it seems like a silly discussion because China just stimulated like to the equivalent of if the Fed cut by 100 basis points on that day instead of 50 on September 18th. And it leads me to believe that unless something horrible happens with US Q3 earnings for companies, which I don't think that's going to be the case, then we should have a good end of the year because China is just providing so much more additional capital that can come into all these stocks and all these equities. So I think the China move is huge. I think it's very important. We cannot undermine that. I don't even think you have to go long China to benefit from that. You can just be long the US and China should help benefit from it. Or China should help benefit the US. But if you want like increased alpha, then I think going long China is possible. Another thing that's important is Chinese companies were net short by 60% of their floats in aggregate. I don't know if that statistic is as accurate anymore. It was accurate as of like Tuesday last week. So I imagine some of the shorts are covering. And if some of the shorts are covering right there, that means there's going to be more momentum piling onto these stocks. Or that just means that, those shorts are going to wait and see if this is real. And if China keeps money printing, then they're going to cover later. Inevitably, it means it's going to be good unless this is fake and unless China like stops all the stimulus, which if they're being this dramatic with the amount of things they're doing, like it's not one or two little things. They're like going all out, turning on everything they can do They sold 140 billion of sovereign debt last Thursday to raise capital. Like they're doing this for real. And if they're doing this for real, I think it's going to be really good for the broader U.S. economy as well. Okay, so that's what we had with China. Let's look at some charts. Let's look at some charts and go deeper into the macro. And then I want to talk about the port strikes that are happening, because that stuff is very important in regards to where we could see some potential headwinds for the month of October. Do I think it'll be that big of a deal? No, but we'll discuss it and try to go deeper on it. So here are some charts that I want to show. Let's start with this first one. So based on S&P 500 options, non-farm payrolls are the main catalyst until the election. So what's really interesting about this is that on September 6th, the market tanked 5%, or I think 4.5%, and it was the worst week of 2024 outside of that August 5th week. And it was based on non-farm payrolls. Remember, September 6th, we came in at 142,000 versus 160,000. So the next one is going to be on October 4th, next Friday. That's going to be very important. I'll be live at 8:20. We'll be looking for the number at 8:30. And if that number is decent, then you've got CPI on October 10th, which I think is going to be below 2.5, which is going to be great. Oil basically guarantees that that it's going to be below 2.5. Retail sales hopefully is not horrible. Then you have the Max 7 earnings. Then you have another non-farm payrolls on November 1st, right before the election. Then you have the election November 6th, and then November 8th, you have the FOMC meeting. So literally right after the election, JPOW is going to decide if we keep cutting rates or not. And most likely we're going to cut rates, whether it's a Trump administration or a Harris administration. But you have two big non-farm payroll events right before that happens. And so as long as those non-farm payrolls are okay, then that'll be all right. Now, Goldman Sachs says, hey, we expect 165,000 jobs in October. Or for September. If we get to 165,000 jobs, folks, that is going to be really bullish. I mean, I think the consensus is 130 to 140. They say we estimate non-farm payrolls rose 165,000. They're assuming labor force participation is going to be the same as 62.7. Unemployment rate will be the same at 4.2. Average hourly earnings, they think it'll be up 3.7% year over year. Monthly, it'll be up 0.2%. Private payroll private payroll employment 145. And then non-farm payrolls in general will be 165. Consensus is about 146. The last time we had 142. If Goldman Sachs is right and we come in at 165, they could be wrong. But if they're right, that means we have more jobs. That means we have more jobs. We have more people making more money. More people making more money. More people are going to be spending. More spending means good for Q3 earnings. Now, the only bear case to that, is, inflation is going to reaccelerate. But now you've got core PCE coming in as low on the monthly and the yearly, which happened on Friday. And on top of that, you've got oil that has collapsed. Even if oil goes back to 75, that is still going to be lower than where it was historically for the rest of 2024. So if people say, people start spending again, that'll create so much money that it'll reaccelerate inflation. I don't see that happening anytime soon, because you've got oil collapsing dramatically. On top of that, if you can't have it both ways. You can't be like, people are living to paycheck to paycheck. But if we add 165,000 jobs, then boom, there's going to be this reacceleration of inflation. That doesn't make sense, because if people are living paycheck to paycheck, then that means they're not going to be spending as much. So if we had 165,000 jobs, that's good. There will be more people spending, but there will not be more people spending to the extent that we literally reaccelerate inflation to the point where there's not enough TVs on the Best Buy aisle shelf because too many people are coming in to get them. So Best Buy has to raise prices to kind of lower that demand and fend off some of the people that are trying to get those TVs. Like, if we have a bifurcated economy where we're adding a decent amount of jobs, but people are still living paycheck to paycheck, there's no way there's so much spending like there was in 2021 because everyone got a stimulus check to reaccelerate inflation. Plus oil is coming down. So I think the reacceleration of inflation argument is just dead and buried. It is not a good argument at all. You can argue that people are taking on a lot of debt to be able to finance all the things they're doing. I'm not going to argue with that. But the idea that we add jobs and that creates inflation again, I think that's likely not happening. So from that perspective, I think that's going to be important. And if we can add 165,000 jobs, the market is really going to like that going into the latter half of the year. Now, let's talk about October. Here is a chart on what's happening with October. So October is not the best for equities in election years. October tends to be a weak month for stocks in an election year, not to mention stocks are higher 10 of the past 11 months. Note that October hasn't been lower 2 years in a row for 15 years, and it was down last year. So as you can see right here, October tends to be weak in election years. The chart right here says S&P 500 index average monthly returns from 1950 to 2023. And as you can see in October, you don't have the best returns. Now, September also sucks, but this year it looks like September is going to be green. So maybe October and September together defy the historical expectations of what happens in an election year, because September historically has been bad. But, October has historically been bad, but it seems like September is definitely going to defy that. And maybe October defies that as well. The black right there is the election year that you're looking at. So during an election year, July and June tend to be good. August tends to be good, which we saw, even though we had the August fiscal collapse. September and October tend to be bad. Those are those black bars at the end of the chart right there. However, October hasn't been lower 2 years in a row for 15 years. Last year, do you guys remember October 2023? I remember October 2023. October 2023 sucked. I mean, my portfolio had gone to like a low that was similar to December 2022. I remember in October 2023. That's when the S&P went, I think, from 450 to 410. Remember, we hit 465 in July of that year of 2023. And then we went all the way down to 410. And then from 410, we started like the bull market of 2024 because we pivoted in December. Jay Powell said we're going to do 3 rate cuts. And then inflation was stuck for like 5 months and no one knew what was going to happen. And then finally inflation starts to come down. So if October hasn't been lower 2 times in a row for the past 15 years, you've got that historical precedent on your side. But also October sucks for elections. September sucks for elections. September so far has been good in an election year. We'll see how it ends out tomorrow. Maybe October ends up being good as well in an election year. Now, for October to be really good, I think it's very simple. I think we just have to have good earnings. If we have good earnings, I think October is going to be good. If we have crappy earnings, then October is not going to be the best. But based on everything I understand from what's going on with guidance, it seems like October shouldn't be the worst thing in the world. Okay, here's another chart. So the S&P 500 has made a new all-time high in the usually weak month of September 21 times other than 2024. So this chart is the number of all-time highs, which we just had last week. In September, it has happened 21 times. What happens after that? In October, things are about average to flat. But Q4 has been higher more than 90% of the time with a slightly better than average return. So when September hits an all-time high, historically, it doesn't do that because September is a bad month for the year, but it has happened 24 times or 21 times. The last time it happened was actually 2021, and then it happened in 2024. On average, October is up 1%, and on average, Q4 is up about 5%. So just to put some numbers on that, if we were up 1%, let's say we end the year at 570 or end September at 570. If we're up 1%, that means we would be at 576 in the month of October. And then 5% from that, we would be up in December at 604. So we would hit 6,000 on the S&P. So if this chart is correct in terms of historically what has happened in October and Q4 after the S&P has hit an all-time high, you're looking at 6,000 on the S&P by the end of the year, which might happen, might not happen, but that is one thing to look at. Here is another chart that happens in the context of October. So S&P 500 with a shot of being up at 20% year-to-date heading into October for the first time since 1997. We will see what the year-to-date return is tomorrow at 4 p.m., but it has happened 9 times in the past. The last time was actually the year I was born, 1997. Year-to-date end of return for the S&P in September was 27.9%. Now, the bad news is October has historically been lower 7 out of 9 times that has happened. So if we end green above 20% tomorrow for the month of September, that'll be the 9th time that has happened in history since 1950. The Q4 return on average is 2%, but October's average decline is 3%. So you've got a mixed bag. You've got, some charts saying, hey, October and the rest of the year tends to go well, even if September was green. You've got other charts saying, hey, if September was actually decently green, and then you combine that with the year-to-date return going into October, which kind of makes sense. October tends to be volatile because people are taking some of their profits, especially going into an election year. People are also afraid about the election. So that is some of the volatility that you get. I am of the belief that October is going to be volatile. I think it's very reasonable to assume October is going to be volatile. And going into the election, people are going to be afraid. However, I was also of the belief that September was going to be incredibly volatile. And it was, but so far it ended up being more volatile to the upside. And September 6th was a great dip. It was a great buy the dip day. So I really don't know how October is going to play out, but this year has defied most historical expectations. China turning on the money printer and the Saudis pumping oil has kind of taken away a lot of the overarching bear arguments. Not saying that there's not any bear arguments, there's plenty of them, but those two macro catalysts happening at the same time, like, it's hard to deny the type of landscape that's creating for equities. And now it's just a question of how afraid are people of the election. And if people are really afraid of the election, they're going to take some money out and they're probably going to chill for a little bit. If not, I think money keeps entering into the economy. We saw money market funds have a $120 billion increase. Now, I'm still researching this, but I heard a couple of arguments. And actually, I was talking about it with someone on Twitter this weekend. But they said that money market fund increase is due to quarterly end and a reversal of corporate tax outflows, which is actually bullish because it's not people leaving the market. It's just like money rotating from a certain sector to another sector, which is in this case, corporations to money market funds. I think that's possibly true given the magnitude at how much money market funds increased at 120 billion. Again, still doing research on this, but even if we assume a more bearish case that people were selling equities to put into money market funds, I still think that's okay because it seems like a lot of people are just camping out, collecting even 4.5%. As you can see, now we have 6.42 trillion on the sidelines, and they'll be back after the election, which is fair. I mean, it's totally fair to me to wait. Also, there can be an argument that people are tax loss harvesting, so people are selling off some of their losers. I know it's a couple early months before you tax loss harvest. Most people do that in September or in November, December, but maybe people are like, you know what? I don't think this stock's going to recover. Let me just like get rid of it right now. At least take some of the cash, get a little bit of a return on the cash, and then I'll be back into the markets if, you know, the election is goes well for people and they're ready to go back in. So we'll see what money market funds look like next week. Kind of wouldn't be surprised if it continues increasing. But the fact that markets are at an all-time high with money market funds increasing and China printing and the Saudis pumping, it just seems like there's a lot of money ready to come back into markets, and that could lead to a really fun end of year as well. Christian says the QQQ getting to 500 is a key level. The last time we touched that, the market dump. Yeah, remember we touched that though on what was it? Well, we touched that. Well, you're right. We touched that July 16th. August 5th was the dump, but we started dumping from July 16th to August 5th. So that's a good point. That didn't happen on August 5th. That happened a couple weeks before August 5th. So getting past 500 would be very important. The problem is the only way to get past 500, in my opinion, on the Qs is either NVIDIA to 150 or Google to 200, because I don't know what else is going to pick up the slack. Apple is already valued nicely, to say the least. Meta has already had an incredible run. I don't know if you could, ask more from Meta. Microsoft, I believe, it's done well, but Microsoft at 470, 480 is just a bit aggressive in my opinion. Amazon getting to 220, I think is very realistic. It's just a question on if their operating margins are enough for the street to get excited. So, maybe Tesla takes it there. If Tesla has a run to 300 on 1010, I don't know how sustainable that's going to be after that event. Maybe sell the news, maybe not. We're going to have to really see. But I think Google right here is what's really holding back the Qs, because Google was at 193 back in July. And that was helping the Qs a ton. And then Google has fallen ever since, all the way to 148, now at 165. So I would imagine it's going to come from either Google, Tesla, or probably Amazon over NVIDIA. NVIDIA seems like, it's kind of oscillating here until we get to Q3 earnings. But Amazon at 210, I think is very possible. Google at least at 180, I think is possible. And then Tesla, anything is possible for Tesla, but maybe a run to 300 if 1010 is that revolutionary is possible. All of that could bring the Qs back up to the 500s. And that would obviously be very bullish for tech. And if that's bullish for tech, then that's going to be bullish for the broader market as well. S&P, again, you can see it ended last week at 570 on last Friday. So we're going to have to see. And it'll be really important. But that is kind of the core argument I had around the macro. Are there any other charts that I want to look at? I showed the October charts. I showed the September charts, non-farm payrolls. Yeah, those are pretty much all the charts. Actually, here's another one. Okay, so this one was also really interesting. We'll talk about Palantir in a bit as well. We'll talk about Palantir. So 26 months and counting since the yield curve inverted, the 2 and the 10 year. Okay. July 2022 was when we had the yield curve inversion. Now, historically, when you have a yield curve inversion, that is when you have a recession. So all of these examples, March 2019, March 2000, January 1989, December 2005, etc., they all had yield curves invert. And then the lead time on average before a recession was 14 months. Meaning, for example, in December 2005, the yield curve inverted. Then you had 24 months until the recession. In March 2019, the yield curves inverted. Then you had 11 months until the recession. to be fair, there was a pandemic that happened in February 2020 as well, but still. Then we had a recession start and then a recession end. So far, July 2022 is when those yield curves inverted, and we have not seen the recession. Now, I'm not saying we're not going to see a recession. I think a recession probably happens just based on the nature of, the economy. Like, you have a recession most of the time when this stuff ends up going out. It could be a small recession. It could be a rolling recession. It could be a very, a basic recession over a couple months, nothing too dramatic. But I would imagine at some point it happens, unless tech earnings and AI is so real that we don't need to have negative quarters of GDP growth, which would deny a recession. We don't need to have massive unemployment, which would deny a recession. And we don't need to have crippling levels of inflation, which would theoretically cause a recession. It was supposed to cause a recession over the past 2 years, but Jay Powell has figured out how to not let that happen. So this might be another economic indicator that ends up not working for 2024. Maybe it works in 2025, 2026. We'll see what happens. But we have not had that recession so far that the market was expecting at the beginning of 2023. O'Brien says, I believe we're in a recession. If the economy is so healthy, why cut interest rates? Two simple arguments. Number one, you cannot have interest rates more than double the current inflation rate. That is too tight of a policy. That is too restrictive of a policy. That's not a good thing to do. In that case, you're just getting ready to induce a recession. Number two, if the economy is so healthy, you cut interest rates to keep the economy healthy. Meaning, if there is not an upside risk to inflation reaccelerating off of cutting, which is the only kind of reason you're probably not cutting, the downside risk is that unemployment starts to take up if businesses still have a harder time generating meaningful growth, which allows them to hire more people because they have to keep growing, if the cost of capital is too high. That's another thing we didn't talk about in the beginning of the show. IWM, a lot of these small cap companies are growing much faster than the S&P 500 companies. Some of them, obviously, a ton of them not profitable, but the ones that are profitable, the lower the cost of capital, the better it is for their growth prospects as well, which is another tailwind for the broader economy. So if we're in a healthy recession, you cut interest rates because inflation's coming significantly lower than the current federal funds rate, even at 5% when they cut by 50 basis points. And second of all, you make sure to cut to not let things potentially get to a point where the labor market cools or rapidly declines to such an extent that unemployment goes up, which is what Goolsbee, Bostic, and Jay Powell have been talking about for the past couple weeks. Even Waller last week. The reason they cut by 50 is because they want to make sure that it's a legit soft landing, and you can't have a soft landing if companies are still struggling to hire people. The way to get them to not struggle is to lower rates, even if those rates are going to take place, the impacts of those rates on companies are going to take place after 12 months. At least in the next 12 months, you've set yourself up for broader growth, given inflation is coming down and rates are coming down as well. So I think that's the reason why you cut rates. Unemployment will go up as more and more companies learn how to utilize AI. I don't disagree with that. The question is to what extent and how fast is it going to happen. And I think we have to keep an eye on this, right? We've seen some level of unemployment due to AI, but we've not seen absolute commoditization of every job. So far, we have not seen literal software engineers fully be replaced by AI. I'm sure some companies are probably hiring less junior level developers because they're having AI help their other senior developers. But we have not seen Google say, hey, instead of hiring 10,000 people and paying them $250,000 a year, we are literally going to replace them with 50 people using AI or 50 coding agents doing all the work. That hasn't happened yet. I think it could happen, but it hasn't happened yet. I've seen more commoditization in the freelance market. So people that are making logos, I've seen that. Yeah, that is starting to become more commoditized. But so far, unemployment is not going up dramatically because of AI replacing jobs. We do have to keep an eye on that. That's another reason you have to cut rates, because you need more incentives for companies to borrow money and grow, even if they're not, or even if they're replacing their current employees with things like AI. So again, I think we're going to see, and I think we're going to need another year of real AI progress to see how this plays out. But if that does happen, then we'll see how unemployment and then interest rates are affected based on the unemployment as well. Okay. Apple. Let's talk a little bit about Apple. So a couple pieces of news that happened with Apple this week. I want to do a quick segment on this, and then we'll talk about the ports. This is the more bearish part of the news that I wanted to bring to everyone's attention, because it is something that is probably, in my opinion, going to create some October volatility. But the question is going to be, to what extent does that volatility take place in? So I posted last week, this was the famous Elon quote tweet of mine. By the way, the Times of India mentioned this post in an article they put out today. This thing really went viral, 56 million views. All of that is because of Elon Musk. But the whole point of the post was OpenAI has people leaving. Sam Altman's getting a $10.5 billion payday. And I said, are Tim Cook and Satya Nadella okay with this? How can you be okay with a company that has 3 high-level executives leave immediately, or like literally all on the same day? Well, the Wall Street Journal reports that Apple's pulling out of the latest OpenAI funding round, which would be investing about $6.5 billion into the company. Now, this makes no sense to me. Why? Apple has so much cash. This investment would have been a couple $100 million, even if it was $1 billion, even if it was $5 billion. They could have invested the whole round. It wouldn't have made a dent in Apple's balance sheet, in their ability to do buybacks, etc. So it absolutely was not about the money. It had to be about something else. Second of all, GPT is the default foundation model for Apple Intelligence. Let me say that again. When you get Apple Intelligence on your iPhone in a couple months and you ask Siri a question, the default model is owned by OpenAI. How could you decide, if you're Tim Cook, that their foundation model is the best model to make the default de facto model that when people ask questions to, GPT is essentially giving the responses via Siri, but still decide at the same time it makes no sense to invest in them? It doesn't make any sense. It makes no sense to say, yes, OpenAI is the leading LLM that we're going to use in Apple Intelligence, but then you're not going to invest in that company. Like, why not? I believe Tim Cook is giving himself an out by not investing in this round because he's afraid of the internal turmoil in the company. So, for example, if OpenAI implodes, which I don't think it will, but let's imagine that happens, Apple can just replace GPT with Gemini or Llama or Claude from Anthropic, whatever they want, and they can say, yeah, well, the partnership didn't work out and we're moving on. If they have their money, which is not really Apple's money, it's investors' money, locked into the company via some type of equity financing round, then OpenAI's issues become all of their investors' issues, and Apple, Nvidia, Microsoft would be some of the 3 largest investors. So I think Apple doesn't like having those types of issues. This is the same guy, Tim Cook, that didn't take a meeting with Elon Musk in 2018 when Tesla was almost going bankrupt because he didn't like Elon Musk at the time. I guess he thought Elon Musk was too unconventional of a CEO. I imagine those feelings have only gotten worse for how he thinks about Elon Musk. And B, it's just Apple doesn't do acquisitions. The last major acquisition they did was Beats by Dr. Dre. I think they paid $3 billion for that in 2014. Since then, I mean, they've done acquisitions here and there, but it's been very minimal. You know, it's not like they're buying Disney or like some blockbuster application or acquisition that would be super exciting for Apple. So I think Cook is hesitant to make this equity investment because they don't make a lot of investments. And then B, Apple's a tech company. If the CTO of the tech company leaves, like the CTO, not some junior level developer, the chief technology officer, if I understand what a CTO is leaving the leading tech company that's about to raise $6 billion. I think Apple is like, well, something's going on because that CTO did not like the way the tech, again, she was the CTO, was running. Now, maybe there was an internal problem in the actual technicalities of OpenAI. More importantly, in my opinion, or more likely, there was something involved with the safety of OpenAI's models that she disagreed with, which is why she left. Dude, you don't leave like that. Like, there are very few opportunities in life where you get to build something very important and big that is like the center of attention. I don't think you leave unless something happened and give up that much money based on the potential of what something could turn into. Like, it's just very rare. And then if you want to say, okay, well, she was leaving because she was leaving, then fine. Why are 2 high-level VPs of research leaving the same day as her? I don't know, dude. I don't know. It's very weird to see how this all played out. So I think from that perspective, Apple is upset, and that's why they're pulling out of this round. Christian, thank you for the $5 super chat. Apple is upset because Sam and OpenAI are creating a device with Laureen Jobs and Johnny Ives. Trust me, this is the reason. No Mir Murati. So that's the second argument that I was going to bring up. Johnny Ive is reportedly, even though it seems like the reports are pretty accurate, this was the guy who designed the first iPod, iPhone, all that stuff. He has a deep legacy in Apple. We're working with Steve Jobs. It seems like he's working with Sam Altman now to create a device that is going to be running with GPT as the operating system, which will be rivaling the iPhone. Now, you could argue that Tim Cook is upset about this, and he doesn't want to put money into a company that is just going to make a competitor to the iPhone, which is theoretically what he would be doing. But I'm assuming he knew this. Like, he's not getting his news updates from the Wall Street Journal. I'm assuming Tim Cook has a smart group of people around him that can figure out if Sam Altman is hooking up with one of his former colleagues to build some brand new phone or device that is going to combat the iPhone. Like, I'm sure he knew this months ago, weeks ago. We found out about it a couple of days ago because it's breaking news to all of us. But I'm sure this has been and also these rumors came out in late 2023 as well. If you remember November, December 2023, these rumors were floating around. It seems like it was confirmed this week. But if that's the case, Apple would have never been in the discussions for OpenAI investing even 2 months ago, based on the idea that they thought this was a possibility. Maybe it officially became real, and that's when Apple decided to pull out. But I think it's a combination of this, along with a combination of some of the turmoil happening inside of OpenAI, that has got them very scared to make that investment. And as a result, they're kind of hedging back some of their bets. You know what would be funny is if the people that left, Bob McGrew, Mira Murati, all these people from OpenAI, if they started working at Apple. It would be hilarious if they started working at Apple or if they started working at XAI. If they started working at XAI or Apple, it would be very, very funny. I don't think that's going to happen. But if it is, then it lets you know it was a problem with Sam. It was not wanting to take time off to like explore themselves or anything. It was a problem with Sam Altman. And so we will find out over the next couple of weeks in terms of ultimately what is going to happen with them. And Ilya, and Ilya started a new company as well, which is just insane, and raised $1 billion for it. So I think there's a real argument here that something's up, and because something's up, we're gonna have to find out over the next couple of weeks what exactly, or hopefully next couple of months, what is happening as well. All right, so let's move on to a pretty bearish piece of news for the broader economy. I'm gonna play this video. A lot of people probably haven't got updates on this. I think this video does a good job explaining what's going on, but we are gonna have a strike in like 2 days from the International Longshoremen's Association, ILA, which is a labor union that represents longshore workers who handle cargo at ports in the US, Canada, and Puerto Rico. These workers are responsible for loading, unloading, and managing goods shipped through the ports, ensuring smooth trade operations. They have over 65,000 members, and they are going on strike. We're going to talk about the implications of this after we take a look at this.
Days away from a potential strike by 45,000 dock workers at more than 24 ports along the East and Gulf coasts. Negotiations remain at a standstill, with half of the nation's cargo in limbo. Trucking companies are scrambling to move products off ships before things potentially grind to a halt on Tuesday. And now major shipping companies say they will be slapping a port disruption surcharge on all cargo coming to or from these terminals if a strike does go through. Joining me now is American Trucking Association's president and CEO, Chris Spear. Chris, great to have you. Thanks very much for being here. What's your reaction to this, and where do you think this is going?
Well, Maria, thanks for having me. I think the impact, if this strike occurs next Tuesday, is going to be significant, not just on the economy, but Americans, everybody that's in need of goods each day are going to feel the impact that this is going to have. We're talking 36 ports in the East and Gulf Coast that are represented here. 5 of the top 10 in the country are going to shut down on Tuesday. We're moving 12,000 trucks daily at Port of New York, New Jersey. This is very significant, especially on farmers. We're talking nearly half of the goods exported out of our ports come from these East Coast ports. We're talking produce, poultry, cotton. This is very significant on our farmers. That produce is going to be felt first in week 1 if this were to occur. People are going to have limited choice, and they're going to pay a lot more for it. So I appreciate you paying attention to this, because it's coming.
Well, this is a great point that you're making. So produce gets hit first. And I was thinking that the real impact would be inflationary, because obviously the supply-demand dynamics leads to higher prices for things. We're just trying to get inflation down, and perhaps we see another spike as a result of this.
Absolutely. And trucks are the glue in all of this. Whether you move it on truck or rail, trucks are still going to move that last mile. And we're talking, large companies, but also the medium and small companies, independent contractors, owner operators. They're going to get hung out to dry if these ports shut. So beyond the 85,000 ILA workers, we're talking thousands of other workers that support the supply chain. It's going to take a long time after 1 to 2 weeks of shutdown for the economy to recover. So inflation is definitely an outcome from this.
Yeah. So if the truckers take on more load, doesn't that mean we see an impact to gasoline prices? I mean, oil prices have come off of the highs in the last couple of months. Does that reverse?
Absolutely. I think you're going to see repercussions that are going to last. So every week is about a month. 2-3 weeks push out into a quarter to 2 quarters, you could see this spilling well into 2025, having real repercussions. If the longer it plays out, the more impact you're going to have. So 36 ports, East Coast, Gulf Coast, this is very significant to the American economy. You can't reroute all this through the West Coast. So shutting down for terms and conditions that are completely out of reach, 70% pay increase, that's what the ILA is asking for. I think you and I would love a 70% pay increase, but that's not reality. So they need to come to the table. They need to get reasonable, and they need to get a deal.
Okay, so this is obviously not a good thing. How much is it going to affect the broader markets? If the strikes seem to last for the next couple months, it's not going to be good. Now, a lot of people aren't talking about this. I just started doing research on this week. But the strike is set to start October 1st, so on Tuesday. And supply chain disruptions are the biggest issue. The industry that's going to get hurt the most, which is not the best for inflation, is automotive. So a lot of the automotive sector is particularly vulnerable to disruptions at its ports due to its reliance on imported parts. Even making a door for a car, there's a variety of different parts that you have to put into that door, and all that ultimately is imported. We saw when COVID happened, the entire world shut down overnight because a lot of the supply chains flipped, and that is something that could happen here. Now, some people are saying, "Oh, well, this is not this big of a deal because this happened in California a couple of months ago, and there were some strikes, but ultimately that was resolved." Correct. The problem was that was the West Coast, and this is affecting the southern border around Texas and the northeastern border around New Jersey, New York, Pennsylvania, etc. Those ports have a lot more inventory, or at least the different types of inventory that they have is magnified versus what was happening on the West Coast. So that's not good. And they want 70% increases in wages. I'm completely ignorant to the battles and struggles of the ILA in comparison to the companies that pay them. I knew a little bit more about the automotive strikes back in, I think that was September 2023 when they were going on their strikes for a good, I think it was like 2 months they had their strikes. And I got educated on that. So I have a lot more to learn about this, but I don't know if 70% is reasonable. I would imagine no employer wants to pay 70% more wages. I don't know if their argument is just putting up 70% and hopefully they get 45% as a bargaining. I don't know what it's going to be, but it's not good. And so this is something a lot of people aren't talking about too much. Like Tom Lee, for example, put out his Sunday note, which, by the way, let me read that now. And it didn't mention the port stuff at all. It just mentioned election volatility. So here's what Tom Lee said about the markets going into tomorrow. The S&P 500 closed at all-time highs 3 out of 5 days last week as the impact of the Federal Reserve September 18th rate cut decision spread to China. China created a ton of stimulus, which was obviously a very good thing. The stimulatory blitz helped buoy stock indices around the world, not just in the U.S. Unsurprisingly, Chinese stocks had a banner week with the CSI 300 index up 16%, best weekly gain since 2008. Hong Kong's Hang Seng index was up 13%. In the wake of Beijing's stimulus measures, the regional bet on China might make sense for those who remain hesitant about investing in the U.S., Lee suggested. Among the industries the Fundstrat team has found to be positively correlated to China are those in commodities, industrials, and consumer sectors. Now, they also go on to mention that, hey, we think for U.S. investors, you might be a little bit afraid of investing in the United States, and we would be cautious until the election. But after the election, we think things can go well. They are not mentioning in Fundstrat's note to be cautious based on this strike that's about to happen. Really, no one's talking about it. And so that begs the question, is it that important if no one's talking about it? Or is it really important and people are going to start talking? Like, this theoretically should make headlines on CNBC the day it starts, because we should start to see the futures and the broader equity markets start to price this in as something that's bad, either for inflation expectations or for company earnings, even if those earnings don't have impacts until Q4. And so I don't know. We're going to have to see kind of how it plays out. It says, for U.S. investors, Lee and Newton both urge caution in the immediate run-up to the election on November 5th. Yet, despite election-related uncertainties from a still tight race, Tom Lee remains constructive when looking out until the end of the year. He reminds us that the S&P 500 is on track to close up for the month of September, despite having fallen 4% in the first week of the month. To me, that's a strong sign of the market, particularly when considering that if September does turn out to be positive for stocks, that would mean that the S&P 500 has been up 8 of 9 months so far in 2024. So they're bullish on the China stuff. They're bullish on how China is increasing liquidity for U.S. markets. They're kind of bearish over the next 6 weeks going into the election, which is fair. But this port strike thing is not really being mentioned. And so maybe that ends up being bad as well. If not, then good. I mean, maybe it's a little overhyped right now and people are kind of screaming doom and gloom. It logically makes sense. It looks like there's going to be a delay in the import of consumer goods. There's going to be affected ports that handle nearly half of the U.S.'s seaborne imports, which could disrupt to $3.7 billion of trade per day. If the strike goes on, if no one's willing to do the work, this is another reason why robots, there's a bull case, because robots are never going to strike. They're never going to take a day off, right? They're going to be able to just keep doing all this manual labor. So if this stuff continues to happen in the next week, I don't know, we might see some issues, but if not, then hopefully we don't see too many issues. Nikkei is set to plunge 6% according to CNBC. So Nikkei futures are up right now. Oh no, sorry, I was wrong. Nikkei futures. Is this accurate? And so today's what? September? No, I think, wait, hold on. Time in Japan. Yeah, I think this is accurate. Nikkei's down 4%, folks. We got 4% down. Interesting. So Nikkei just fell 4%. Now, why did that happen? Bitcoin's down because of that. Well, Bitcoin did a little recovery. Bitcoin fell all the way to 65,100. Now it's at 65,300. Why is the Nikkei down? Why is that down? Futures, the U.S. futures are still up. U.S. stock futures are still up. The Dow, the S&P, and the NASDAQ and small caps are up, even though Nikkei is down. Weird. Not sure. Honestly, not sure. One, simple argument is people are taking profits because the Nikkei had a great week last week. But also, I mean, look, I think there was something that I saw something around Japan a couple of days ago, but it wasn't that big of a deal. USD JPY is kind of stable. I mean, it's up a little bit, but it's not like it hasn't been at this level for the past month. So I don't think this is the reason. But there was something else about Japan that happened Thursday night. I'm not sure exactly what it was, but yeah, we're down 3%. China, well, where's the CSI? CSI, look at this. China's up 4%. Or no, that was last week. But Chinese futures are up 4%. Yeah, Chinese futures are up 4%. So Chinese futures are up 4%. We saw FXI on Robinhood up like 9%. But the Nikkei is down 3%. I actually don't know why the Nikkei is down, to be honest. FXI is now up 3% overnight. Volume on this, dude, 267,000 shares on FXI, which is the Chinese large cap ETF. That's crazy, dude. I don't think overnight FXI has had 200,000 shares of volume in a while. Yeah, I'm not sure what is going on in Japan. Let's see if there's any updates on that. I'm surprised U.S. stocks aren't down either if Japan is down. No one's saying why it's down. Everyone's just tweeting Japan is down, but no one's explaining why. I don't think anyone knows. China futures are looking good at this moment. Yeah, China futures are doing fine. Japan rate fears dent Nikkei. So what, that they're going to raise rates? Really? That's why it's down? Yeah, Nikkei dives as market ponders the risk of higher rates. Dude, what do we need to do to get the Bank of Japan to realize that they cannot raise rates because they just can't do it, dude? They just can't do it. At least not for the next 5 months, dude. Let us get through 2024. Then you could do whatever the hell you want. But no, in general, dude, Japan has a lowering population. They need lots of innovation. There's no reason they should be trying to de-stimulate the economy by raising rates for whatever stupid political reason they have about making sure the yen is strengthened against the dollar. This is a country that has a 247% debt to GDP ratio. There is no world in which they should be thinking we should be raising rates. They need to increase growth as much as they can, not worry about inflation. It was an election. It was a Japan. Hold on, let me see. Japanese election. But it is okay. Hold on. Because maybe the person who got elected. Okay, I don't see any election. It says 2025 July is going to be their next election. Or it could have been an election of the person in the Bank of Japan. Because regardless of any election, the political sentiment would have to be that rates will be raised based on this. Shigeru Ishiba is set to become Japan's next prime minister after winning ruling party leadership election. Okay, so they had another election, and Shigeru Ishiba. Why does it sound like Shiba Inu, dude? Why does it name sound like Shiba Inu? Okay, I don't really care. I just want to know if this guy thinks we should raise rates. Because if he thinks we should raise rates, then that's not good. This was on September 27th. This was 2 days ago or Thursday. Oh, so that makes sense. So if he won Thursday night at 11:10 when this was published, and I remember Thursday futures for the Nikkei fell by 4%, and I was confused why, because it didn't affect any of the rest of the markets. Maybe the next 3% decline we're seeing right now is primarily based off this idea that that this guy getting elected is not something that the market likes. It's funny though, like even though we're down 4.51% here, Bitcoin does not care at all. Bitcoin, I mean, if Bitcoin fell a little bit, but Bitcoin's still holding 65 nicely. It's at 65,401. Look at this. It fell all the way to 65.1. Now it's at 65,400. So you got a nice little candle right there. And China's up right now, and US stock futures are up. So this feels more internal within Japan versus something global based on like a yen carry trade or anything like that. Yeah, markets do not seem to care. He wants to loosen monetary policy, lower rates. All right, so if that's the case, I'm confused why the Nikkei is down 4%. They did. Now, the BOJ did say in their meeting that they might raise rates in December, but like that's not enough to get people that upset about Nikkei. This feels like a regular day in Japan where it's just going up or down. It's less about the implications of what is happening in the rest of the world and how it's affecting Japan. At least that's what it seems like right now with the performance of the Nikkei compared to the rest of equity futures. Okay, so let's talk about Palantir to end out the show, and let's get some updates on Palantir. So overall, we talked about macro stuff. We talked about jobs data. We talked about consumer expectations. We talked about Apple and OpenAI. We talked about Tesla. We talked about the port strikes that's going on. We talked about a ton of stuff. We recapped September going into October. Data is 50-50 during an election year. If October is going to be good or bad, it's really, I mean, none of us expected September to be as good as it's been. We'll see how it ends out tomorrow, but September has been a decent month. We'll see what happens in October. Last thing we should discuss is indeed Palantir. So our boy Peter Thiel sold another 4 million shares late on Friday. At this point, Peter has sold, let me do the math, basically $580 million, rounded up to $600 million of Palantir stock. Now, the market does not care. So a lot of people this weekend have been asking me, hey, Amit, what do you think about your thoughts on Palantir with Peter Thiel selling, yada, yada. My thoughts are very simple. I think Thiel's been holding on to these shares since 2006. He deserves to get liquid, which is what he's doing right now. So that I have no problem with that. B, we knew it was a scheduled sale. He's scheduled for selling $1 billion of stock. Now he's sold 60% of that $1 billion within the past week. So that is something to keep in account. But he was scheduled to sell that $1 billion worth of stock. And C, what it tells me is that if there is enough liquidity to swallow up that much of his equity from either institutional investors or retail investors, whatever it may be, then that simply means like the market is not caring about what insiders do. I mean, like if this was 2 years ago and Palantir insiders were selling like, $600 million worth of stock, I think that the market would feel, because Palantir has not reaccelerated its growth story, built a new narrative, yada, yada, that insiders are just cashing out. Now, it's not like insiders are not cashing out, but what's happening is they're cashing out to people that believe that at $36, it's a great buy. Either those people are going to be right or those people are going to be wrong. But that's irrelevant for Peter and Karp. What's relevant is the fact that the money is available, the investor interest, the liquidity is available for people to swallow up those shares. And the question is going to be, Palantir at $85 billion market cap, 33 times price to sales, 216 trailing 12-month PE. Is this a really good price for Peter and Karp to cash out on? Karp cashed out about $325 million. Peter about double that. So I don't know the answer to that question. I mean, look, my intuition tells me, yes, this is a good price for them to take some profits. I mean, like, how can you not say it's a good price given where the valuation stands in comparison to the growth year to date of the stock being up 120%? But I don't think that has to mean that Palantir has to collapse 50 or 40% just based on them selling, Because if the narrative is created, the market has created its own narrative of Palantir that is independent of insider selling, meaning the narrative is the only AI SaaS that's growing, yada, yada. We can go, there's trillions of elements to the narrative. By the way, I posted a video today on YouTube interviewing 3 customers from AI Pecan. I think it's really informative for people to get other perspectives of lesser known customers of Palantir. If that's the case and that narrative is real, then it doesn't matter, right? Palantir is going to win regardless of insider selling. So, yeah, to me, it's just not that big of a deal. I mean, like, it does signal that they think it's expensive right now, but the market doesn't give a shit. Now, next week, if we see like a 5% decline or something, it'll be a really good sell that they did, or a 10% decline. But if we oscillate around 34 to 37 for the rest of the year, maybe even try to push 40 if we have a really good earnings, which again, the earnings would have to be really exceptional to do that, then the market has their own future growth narrative of Palantir, and they don't give a shit about insider selling. Which I honestly think there is a real shot, especially if 30% growth happens in Q3. I think the market's just not going to care about the idiosyncratic things about Palantir that we've cared about as a community over the past couple of years, because they're going to say, hey, we are putting big dollars into AI SaaS names that can actually win. And if Palantir is showing us any hints that they're going to win, irrespective to everyone else that kind of sucks at doing what Palantir is doing, the liquidity is going to come to Palantir. Plus, you've got rate cuts. Plus, you've got China stimulating. Plus, you've got the election coming up. Plus, you've got oil prices that are low. Like, you've got all these macro things that just should send stocks higher. I know Palantir's trading at crazy valuations. I get it. But if that narrative is real, Q3 earnings is real, and you've got that macro picture setting up, it doesn't mean that in 2025 it can't take a big nosedive if like anything goes wrong. But all of that is pretty damn bullish. Now, granted, I think a lot of that move to the upside based on the things I described would be more hype and algorithmic versus like fundamental. Unless we get like 40% growth in Q3, then I'm like, all right, fundamentally it's justified even if you're paying a hefty premium. If we get, 27%, 25%, 30%, it's not really the best growth, but it's enough for people to say, well, you can't say Palantir's not growing 30% top line anymore, because they are. Does the stock go to 45 on that? I don't know. Does the stock go to 30? I don't know. But Peter and Karp are saying, hey, at 36 and 37, we think that this is a good price for us to cash out. And now it's up to the market to figure out what that means for what's going to happen with Palantir. If you put a gun to my head and say, hey, mate, do you think Palantir is going to like really go lower because of this insider selling? Maybe I'm wrong, but I would say no. And again, I just believe the market is thinking of Palantir in a new paradigm. And when you have all this liquidity, the reason I'm saying this, when Karp and Thiel can sell more than $1 billion of stock in 1 week, literally in 1 week, and the market and Palantir is down 1% this week. I think, what is it? For the past 5 days, it was up a little bit. Like it's just like, it's one of those things where it's down 0.43% over the past 5 days after the 2 biggest insiders offloaded $1 billion worth. Like, I just think there's other investors that are ready to buy the stock. If they don't mess up on earnings, I don't think that has to stop either. And so I think that's very good for Palantir. Tom Lee and Dan Ives are bullish. Yes, Tom Lee and Dan Ives are indeed bullish. Now, Dan did put out a note over the weekend. Well, he put out this tweet. And he said, we believe the stage is set for tech stocks to move 10% higher into year end. So imagine NVIDIA would be closing at that point, what? 135-ish, basically. The Q's probably at 520. And another 20% in 2025 with this tech bull market just hitting its next phase led by the AI revolution. That means Dan Ives thinks the Q's, because that's tech, can compound another 20% in 2025. Kind of a repeat of 2024 based on, maybe a little bit lower than 2024's gains based on the end of the year. We believe the overall AI infrastructure market opportunity could grow 10x from today through 2027. I mean, look, either Dan's going to be right or he's going to be wrong, but OpenAI valued at 150 billion, Oracle, NVIDIA, we can go on and on and on about all the data points we have. He also increased his Palantir price target to $45 on Thursday from $38. And the idea is that AI is real and there is a massive opportunity coming up. Speaking of this, let's talk about, this is going to be my last segment that I want to talk about. I found this chart over the weekend and I was pretty shocked by it. So if you looked at MicroStrategy's stock over the past 24 years since they went public in 2000, look at this return, dude. If you bought MicroStrategy in January of 2000 when they IPO'd, you were up 13% over 24 years. Why am I bringing this up? Well, MicroStrategy IPO'd at $154 in the year 2000. They fell by June of 2002 to 5 cents. That is a 0.95% decline in the stock price. Now they've done like a 10x over the past couple of years because of Bitcoin, obviously, right? That's like transformed the company. But my point here, when everyone says 2024 AI tech bubble, valuation's insane, similar to .com. And then I look at the .com bubble and I look at a stock like MicroStrategy that has survived because of Bitcoin, but still fell 99.9%. It begs the question, what stock is currently public that will fall 99.9% like MicroStrategy because of the amount of hype that's built into its offerings, where people have ignored every part of reality around the company, around the fundamentals, around the valuation, and they're just buying the stock. And before everyone gets funny and says Palantir, you could say Palantir is like overvalued by 40, 50%. I don't think it's going to fall 99.9%. I don't think it's NVIDIA either. I do not think it's NVIDIA. So that's kind of my point, right? SMCI has already taken a haircut though. I would agree with you. SMCI is up there in valuation, even though their growth is good, but the gross margins is what sucks. But SMCI, look, it's up 47% year to date, but SMCI already went from 1,200 in March down to 419. I mean, that's already a massive decline from those levels. Now, you can say at 419 it deserves to go to 200. Sure, like I'll give you that. Even though I think the growth rates do argue that, I mean, you could justify it at 350-ish, 300-ish. That's where I've seen kind of fair value. But we've had that type of big decline already. We've had the big decline from NVIDIA going from 140 back to $90 or 92 or whatever. Like, we've seen the decline already this year in tech stocks. They've taken those corrections. I'm talking about a stock that's at 100 that's going to 5 cents, right? Like a stock that just like a string of stocks, because it wasn't just MicroStrategy. That was just one of the examples I'm using, but it was a lot of companies that went out of business and they hyped up the .com narrative. If you want to say these AI names are hyped up, what is an independent AI name? Forget the Mag 7 that actually deserves to fall 99%. I just don't see that in the stock market currently. And if I don't see that in the stock market currently, then like, I don't know, dude. Maybe the 2024 AI tech bubble is not a bubble, even though valuations are overstretched, but it's not a .com bubble per se. And if that's the case, that's not a horrible thing. C3 AI, okay, maybe I'll give, but that's me being a little biased when I say C3 AI. Well, C3 AI, their ticker symbol alone probably justifies them having a little bit of collapse. But their stock this year, year to date, C3 AI, let's see them. Because I know they are, look, even them, dude. You could say they deserve to fall even more, but like the reason I'm bringing this up is because this company has been punished this year. It's down 15%, and that's my broader point. My broader point is that if you are a stock this year, a company this year that has a stock, and you've presented some type of an AI narrative, whether you're Shopify, Palantir, or C3 AI, you've only gone up if the numbers have backed up the narrative, and you've only gone down if the numbers have proved that your AI fantasy stuff you're selling to investors is full of crap. C3 AI, I'm not saying it's full of crap, but it's definitely not full of rainbows. This is down 15% year to date, and that's obviously because investors don't believe that there's a ton of momentum here. If C3 AI goes to zero, that's a $3 billion company going to zero. That is still not the type of .com bubble we saw back in 2000, where you had trillions of dollars wiped out in market capitalization because AI was perceived to not be real. Or not AI, the internet was perceived to not be real. So the point of bringing up MicroStrategy is just like, when I saw that, when I clicked, I was just like on Friday, I was just kind of bored and I clicked the max chart and I was like, holy crap. This thing is up 13%. And like, MicroStrategy has had better returns than NVIDIA over the past 5 years. Like, MicroStrategy has been the best stock to own since 2020. You just sit back and let Saylor buy more Bitcoin and you just chill out. So it's done so well for people. But if you look at it from the year 2000, it's done horribly. And that's because it was never supposed to be public in the year 2000, right? It took advantage of excess liquidity that existed and went public. I don't see any companies that are doing that right now. You can say companies are overvalued. I don't know if companies necessarily need to absolutely go down the drain. We got Tanner in the chat. Tanner says SoundHound and C3 AI. Yeah, I think those are fair. Now SoundHound's an interesting one because SoundHound has a bit of a cult following around it. I still don't know a ton about SoundHound. I know that NVIDIA invested in them and there's some audio AI stuff that they are embarking on. They are growing at 80% though. I mean, like SoundHound at 1.7 billion, you could say that's a little bit expensive at a price of sales of 29, but they are growing at 80%, even if the growth still doesn't justify the valuation. But those two companies, SoundHound and C3 AI, you put them together, you get $5 billion in market cap. Let's say they both go to zero. That does nothing to the broader economy. Whereas in the year 2000, all those companies going basically to zero was very, very bad. And that's why the dot-com bubble was so bad. I just don't see the historical comparison between 2024 and 2000 via the AI bubble narrative. And I'm willing to see it. Like, I'm really willing to open myself up to see that. But Google's trading at 21 times next year's earnings. How is that a bubble? NVIDIA is going to do $32 billion of revenue next quarter. And half of that, more than half of that, 60% of that is going to be net income. How is that a bubble? OpenAI, by the way, OpenAI, New York Times reported they're doing $300 million in revenue a month, and they're growing 300% year over year. And they're on track to do $11 billion of revenue in 2025. Yes, you could say it's not profitable, sure, but they're a startup. Profitability is something you figure out later, but that's real money. It's coming out of somewhere, right? So I don't know. I guess we'll see how that plays out. But at least so far, I don't think that bubble is as egregious as some people were thinking in terms of those comparisons from 2025 and or 2024 in the year 2000. Octo AI from Seattle was bought by NVIDIA today. What is Octo AI? Oh, wow. Okay. Octo AI. So NVIDIA deployed some cash, bought a company. Octo AI. What is this thing? Octo AI. Well, you know what? Let's ask Gemini. I haven't been to Gemini in a while. Let's ask Gemini. What does Octo AI do? Okay, let's see what Gemini says. Octo AI is a company that specializes in optimizing the performance of machine learning models, particularly large language models. They provide a platform that helps businesses deploy models more efficiently, reduce costs, improve accuracy. So I guess NVIDIA brought them for the inferencing and training optimization of what they're doing with GPUs, which makes sense. And, those are companies that are getting liquidity because NVIDIA decides to swallow them up. And NVIDIA obviously has the cash to continue doing that. Again, we didn't see this type of stuff in the year 2000. We just saw companies going public to go public. And as a result of going public with no real revenue or earnings, they ended up getting hit badly. This is the website right here. NVIDIA brought another company as well, Brex, I think. Brex, I know a couple of people that work there that now work at NVIDIA because NVIDIA bought them. But that was also GPU training and stuff like that. So, it seems like pretty much custom training for LLMs with inferencing to try to improve optimization here. Fine-tuning models, build using retrieval augmented generation with embeddings. By the way, if no one's ever built an LLM before, I highly recommend going to some do-it-yourself websites and just playing around with it, because it definitely gives you an appreciation for the process of building a vector database and then embedding data into it to create a sort of a unique form of retrieval augmented generation, because you'll realize all the problems with trying to build it out that way, and you'll get an appreciation for how hard it is to make it work. And I've been using GPT a lot more. And GPT is like a daily thing for me now. And it's so good. The new model is so good. The explanation of it is so good. The answers are so good. It's just really good, bro. And they've figured it out nicely, which is why I think 150 billion is not crazy for OpenAI. It's just the foundation models, there's going to be one winner, maybe two winners. OpenAI, I think, is the winner, which is why I could see it going to $1 trillion. But if all the people keep leaving, that's obviously not a good thing for its actual talent. However, they figured this shit out, dude. And this is only GPT-4, dude. We got GPT-5, GPT-6, GPT-7. We have so much more innovation coming up in the future. This is where I think Sam Altman realized, hey, we need to turn into a profitable company because we need a lot of money to make this happen. And it seems like that's going to be the case. RAG is an API query against an LLM. You're not really building an LLM. Well, yeah, that's fair. The LLM itself is GPT and Gemini and Claude and all that stuff. But for average people that are not literally training LLMs to build any form of retrieval augmented generation against a set of data using an LLM, it's just a good way to understand why this technology is so hard to build and why Google hesitated to put it out for so long, because they knew as soon as they did that shit, it was going to commoditize the search business. Speaking of Google, I said that was my last topic, but you guys know me. I'm a professional yapper. I saw this chart, and this chart was incredible. Look at this shit, dude. In 2001, Yahoo was doing 717 million in revenue. Google was doing 86 million. By 2007, 6 years later, Google's doing 16 billion in revenue. Yahoo's doing 7 billion. I hope this does not happen to Google. And if you replace Yahoo and switch the charts, it's OpenAI instead of Google. That would be insane. Like, it would just be insane if this flipped 20 years later and OpenAI ends up doing. Now, I don't think that's going to happen anytime soon, but I think that is the fear that a lot of people are having with Google right now, which is why it's trading at a discounted valuation. But things change overnight, bro. Things change overnight. And when things change overnight, the entire world can flip, and people might be looking at Google as yesteryear's tech, which, look, dude, at the end of the day, and again, this is not bearish Google, but when you look at 10 blue links, it feels like garbage. Like, as someone who uses ChatGPT daily, it's just like, I don't understand the process. Like, my mind is not being trained anymore to get resources to find an answer, to like get on someone's blog or get on someone's website and like read about it. It's like, give me the freaking answer. To give you an example, Investopedia is a really good website in regards to just learning about investing and definitions about investing, all that stuff. Investopedia, I'm looking at their analytics right now. Let me pull this up because they get a lot of search traffic from Google. Investopedia gets, let's see right here. Investopedia gets, okay, let me see if it pulls it up. Investopedia, they get 38 million visits a month. Okay. Investopedia gets 38 million visits a month. I'm sure you guys have used Investopedia before. Like, it's like, if I type in, like, let's do an example right here. So if I type in, what are call options? Okay. This is on Google. Yeah. Look at that. The first link, Investopedia, the first freaking link. Okay. Now I have to click on this thing and then I have to start reading. Okay. I have to start reading. Here's an ad that I don't care about, or there's a video, there's an ad in the corner I don't care about, blah, 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 blah. I just, it's a lot of information, but it's not exactly, and there's no interaction with this. I can't ask a question to any of this stuff. It's just all on a website. Whereas with GPT, if I say, hey, what's a call option? Boom, we go back and forth, just engaging with it. I think at the end of the day, the idea of getting to Investopedia by asking Google what's a call option, then Google sells an ad on top of that in a sponsored link, and I maybe click on it and Google gets paid. I think those days, it just feels like it's not going to be over tomorrow, but more and more people are going to think it's ridiculous to go to Investopedia versus just ask an LLM for the answer. And that's why I've been struggling to buy Google, dude. I feel like Google's a no-brainer. I think Google's going back to 200, just like based on like passive ETF index flows. Like, I think Google's going back to 200. I don't think it stays here. But that very notion and experience I'm having as a consumer makes me skeptical of thinking that this is going to change. And look, Gemini's been out for a while. It's just not comparable to GPT or even Perplexity. It's just not. And so that's going to be the question. That's going to be the question on what happens. Now, cloud is still amazing. YouTube is still amazing. Android is still amazing. Chrome is still amazing. There's still a lot of other parts of the business that are incredible. It's just that search business, which is like 85% of the revenue. That's the part where it's like, all right, I'm struggling a little bit on that part. Now, here's one more thing I wanted to show. I've had like one more things, but I just can't let you guys go. Here's Zucks talking about why glasses are going to win in 2030.
I think glasses are going to be the next major computing platform, but each new platform doesn't tend to just replace the old one, right? So yeah. I guess the version of this that I think about is like, you probably have this experience often where you're sitting at your desk and you have your computer there, yet you still pull out your phone to do things.
That's true.
Right?
Yes.
Okay. So at some point in the last 10 years, mobile really became the primary computing platform. We didn't get rid of our computers. No. It's just that even when you have it, you still do more things on your phone. So what I think is going to happen with glasses is we're going to get to this point, probably sometime in the 2030s, where you have your phone with you, but it's going to stay in your pocket more because you're just going to be doing more and more things on your glasses that maybe today you would do on your phone. You'll reach a point where, just like with your computer, there are probably some things that could be done in a richer way or better in some way on your phone, but the glasses will be your main computing platform, and that will be kind of your default go-to thing. And then maybe over time you get to this point where people just don't bring their phone with them everywhere. But I think that's really far down the line.
So you got Zucks saying, hey, I'm talking about Google being replaced by ChatGPT. You got Zucks saying, dude, this phone thing, you'll have it, but glasses will be the infrastructure in which you engage with the real world, and you don't have to pick up your phone to respond to a text message. You'll just respond through your glasses. So, I think there's going to be a lot of shifts happening over the next couple of years. I'm still not fully sold on the glasses thesis. I've always been a bit skeptical of that. And if anyone could figure out, I think it probably will be Zucks over Apple. By the way, I went to the Apple store yesterday because I had to buy an Apple Watch for a friend who I'm going to visit in India. And it was pretty packed. It was pretty bad. And I've been pretty skeptical on Apple demand. It was pretty packed. So you had Apple definitely have at least some demand where I was seeing. And I think I overheard an employee say, we don't have any more iPhone 16 in stock. I can't officially confirm that, but like, I think I overheard them. I mean, it was so packed to the point where I had to like go up to an employee and like sound a little irritated for them to give me some help because like no one was like helping me. And I was like, hey, I've been here for like 20 minutes. I really like need to buy a watch and go. And so there was a decent amount of demand there. Now we'll just see if that pulls up into the actual earnings itself. So JPOW is going to be talking tomorrow at 1 p.m. I think that's going to be a nothing burger, guys. I don't think JPOW is going to say anything interesting at 1 p.m. JPOW's probably just going to be talking about what they've done. Like this conversation JPOW's going to have tomorrow at the National Association for Business Economics is probably just going to be him bragging about how he's done a decent job with inflation and unemployment and navigating the global economy. And JPOW doesn't really brag. I don't want to say it like that, but I think he's earned the right at least to talk about the way the Federal Reserve has navigated a pretty dicey situation since 2021. So I don't think he's going to say anything unique that's going to change the current like sentiment around U.S. equities. The most he could say is that we like are further advanced in our talks of lowering rates to tackle maximum employment. He wouldn't say it like that, but you would kind of read between the lines. But he's already said that. He's already said like we're focused on employment, not inflation anymore. And so because he's already said it, I doubt like he's going to say anything else that different for him to, for the market to get excited. But we'll see. That'll be something I'll stream at 1 p.m. tomorrow. And we'll see what he has to say. Amid is exporting all of his wealth to India. Yes, exactly. And my friend, it's I'm not giving it as a gift. He asked me to buy it for him because it's more expensive in India. So he's paying me back for the watch. But it's one of those things where like, see people, in India, prices are elevated. Like for these high end, this is why Apple's not succeeding in India because their shit is so expensive. People would rather buy it from America versus buy the upsell version in India of the same product. Until they get the iPhone down to like the equivalent of $500 in India, which is still asking a lot for the Indian consumer, the iPhone's not going to win in India. They just have to reduce. And I don't know why they're not doing. I don't know why Apple is not like, hey, let's sell the iPhone for free in India, and let's just like get the services. Right? Get them hooked into the ecosystem, get them to maybe buy a laptop, which will kind of make up for some of the expensive, but they're not like, that's not the strategy they're doing right now. And so I think that is the go-to strategy to get the lower end Indian consumer. But obviously it's not going to be easy to do given how much Android has a presence there. Real question is, are my October 11th, $26 hood covered calls safe? I don't know. It's going back with 50 phones in his luggage. Dude, Robinhood's been doing great. I think Robinhood's going to crush. 26 by October 11th, I think should be safe. But I think that event the next week after October 11th will be really good for them. And then, really Robinhood it depends on October. I mean, when I think of Robinhood, I think of China stimulus, Saudis pumping so oil comes down, U.S. markets getting another 50 bips of cuts, and then Bitcoin doing really well over the past month or over the past 2 weeks, which probably will continue as liquidity opens up. All of that is bullish for Robinhood. The reason I think it went up 6%, it was not because of the city upgrade or because Bitcoin was up 1% on Friday. I think the market just realized on Friday, holy crap, like this is where all the activity is going to be happening. This is where all the momentum is going to be happening. They're going to have a new product coming out, which is going to introduce a net new line of revenue for them. If the market is bullish, if you have all these macro things that are obviously bullish, people are going to be trading more. People are going to be putting more in deposits. People are going to be using Robinhood more. It makes sense to buy Robinhood, to go long Robinhood on that bull call for the rest of the year. So I think it makes a lot of sense why people bought Robinhood and why Robinhood's doing well. But I do think that October, if it's volatile, Robinhood will fall with the market and we could see below 20 again or 21-ish. But that would be a big buy the dip for me if that happens. I think that's a really decent dip going into the rest of the year if the rest of the market does well and if the election also is absorbed by the market. Don't eat street food in India or your toilet. or or your toilet will look like a Rocket Lab engine test. You know, I usually when I go to India, I try not to eat the street food because an American stomach going to India, it's just not made for the type of shit that India sells on the street. But I'm sure there's gonna be one of those days where I just like I can't resist, but we'll see. Usually I get sick every time I go to India, at least for like a couple of days, because it's just like a whole different environment. So I'm gonna hope that doesn't happen this time. Overnight trading, Palantir's at 36.86, down a little bit, or it's up like 2 cents. Robinhood 23.74, FXI 33.20, it's up 3%. That's the China index. S&P is up 0.04, Dow Jones up 0.03, IWM up 0.10. The Qs are red. Is Japan still down badly? Because maybe now it's starting to affect U.S. markets a little bit. Yep, Japan is still down 4%. I'm not going to India to get married, bro. Goodness. You guys are wild. 4% down. Let me check the futures. Futures are just went red. We just went red on the futures. Okay, officially went red on the futures. So there you go. Now we got a little bit of volatility. Now the futures going red is like 0.08% type of red, but they still are a bit red. So we got to end out September, folks. We got to end out September, and let's see what happens at the end of September. And then going into October. Amit says that, but he's going to come back with a wife. Dude, I'm there for 2 weeks. It's going to go by super quick, man. It's not going to be a long time. It'll be 2 weeks, and then I'm back. And then right when I'm back, we get into tech earnings. So it's not a really long time. I don't know if you could find a wife in 2 weeks. I mean, I think you can, but like, that is not my goal going to India. Mr. Seymour Zucks says Japan is down 4.4%. Should we be worried? Not really. Apparently they're down because of like internal political statements around raising rates. It's not really affecting the broader global markets. So I think that's just a Japan thing, not a global thing. At least so far, that's what it seems like. You're gonna come back sounding different. 2 weeks is too long. How about 1 week? Dude, I would love to be there for a month. I love to spend time in India, but I realize now that I have like a show every day, it's like any type of vacation that compromises the show is not an ideal situation, especially in a place that doesn't have the best electricity. So as much as I would love to stay there for longer, I am happy it's only 2 weeks because that means we can get back. And as soon as I get back, we got earnings. I'm gonna try to stream 10:10 in India. I think I'll be able to. I'm pretty sure, even if I have to stay up late that night. The October 16th Robinhood event, I think I'm gonna be at a wedding, not my wedding. I will be at a wedding, and so I don't think I'll be able to stream the Robinhood event. I just hope everywhere I'm at has Wi-Fi, dude. Like I cannot survive without the internet and Wi-Fi and checking my phone. So I just hope, and if we don't have Wi-Fi, I think I'm gonna go and like get a cell plan over there for like 2 weeks, and I don't know, it's like $200-300, whatever it is. But I need like internet, dude. I need internet because this is I can't be without the internet. It's just not. Even if I just have to like have my phone on the side and check it, like I need to be updated, and I really don't want to live without that. So hopefully that's not an issue, but we'll see. Did your date know you were getting married? Actually, I was, me and Mateo had a great conversation. We had a great conversation. We talked a lot about tech. I also got to meet another one of his friends that works at Palantir, and so we all went to get dinner. And yeah, dude, they're just really smart guys. They're really, really, really smart people. Like, again, Palantir hires some pretty smart people. Do you think someone in India is going to recognize you? That would be wild, bro. You know what was funny? We were walking outside of the Korean barbecue spot in New York, and another employee from Palantir was just like casually walking in New York, and he saw the other two employees I was with, and he was like, "Yo, what's up?" And so they said hi, and then he looked at me. He was like, "I know you." so like another Palantir employee recognized me as we were walking down the street. But no, I don't think anyone in India is going to recognize. I mean, that would be, dude. India has 1.4 billion people. For someone to recognize, I mean, I know there's a bunch of people that watch this from India, but when I mean a bunch of people, maybe 1,000, maybe a couple thousand if I'm stretching it. I don't think there's like hundreds of thousands of people that know me from India, so or much less millions. So I don't know. That would be cool if that happened, but India has a lot of people, bro. So I don't think that's gonna happen. That's 1.4 billion potential viewers. That's correct. Sachin's in Malaysia. He's not in India. Sachin's in Malaysia, so probably won't be near Won't be near Sachin. All right. I think that's it for me, folks. We are done. It's time to go. I got to go sleep, wake up early in the morning, get ready for the market open. Hopefully everyone had a great weekend. Hopefully got to relax and chill a little bit. You're the only emit in India, so they should know you. Yes, exactly. I'm the only emit in India. And we got a month to end out with September 30th tomorrow. And then officially we begin October and we keep things going. So that's it for me. Thank you everybody for joining. Hopefully you had a great weekend. And let's start off another week. Let's end out September. Let's figure out why Japan is down, and we'll see tomorrow if that has any implications. And we'll keep it going from there. And then Palantir. I mean, look, I don't think we're going to get that much insider selling from Palantir. We got a lot this week. I mean, we got $700 million worth of insider selling this week. I think that's going to probably, stop to an extent. Maybe I could be wrong. But if that does, then maybe Palantir gets a little bit of its footing and we get to keep going forward. Teal sold 600 million this week. It's like 585 or something like that. But he sold a lot. He took a lot of profits. Maybe he takes more. Maybe he doesn't. If he has $1 billion to sell, if he sells the other 500 million or 400 million this week, then that means he's like legit saying this is the top, or at least that's what he's saying. Will it be the top? I don't know. But the fact that the market barely moved off Teal selling this week just means the market has their own narrative around Palantir, and they kind of don't care that much about Teal selling anymore, at least not in the short term. All right, that's it. Thank you, everybody. I'll see you guys tomorrow, 8:45 in the morning. Bye, everyone. Have a good one.